Today, we're going to cut through some of the usual market noise and dive into a really interesting analytical tool. It's called the Trend Impulse Channels, created by a developer named Zierman. The cool thing is you can actually find it as an open source script on TradingView. In this video, I'll break down what this indicator is all about and how you can put it to work in your trading. It's built to give you a fresh angle on spotting and following trends, moving away from those smooth, curvy lines you usually see, and instead laying out price action in a more structured, almost stair-step style. If you find this video helpful, don't forget to hit that like button. Now let's get started. Head over to TradingView. That's the charting platform I'll be using here. If you don't already have an account, there is a link in the description where you can sign up. Once you're in, pull up any chart you want. It could be any market and any time frame. Then click on Indicators, type in Trend Impulse Channels, and select the one by Zierman. Big shout out to them. Then add it to your chart. And there it is, the Trend Impulse Channels indicator. So what exactly are we looking on the chart? The most obvious feature is the stair-step line that follows along with price, along with a channel built around it. This is not a typical moving average. Instead of a smooth curve, it uses that volatility scaled step logic, replacing wig slope with clearly defined steps. Think of it like turning the market's messiest cribbles into a staircase. This gives you a cleaner, less confusing picture of what's happening. The channel itself, those upper and lower bands you'll see, is dynamic. It widens when volatility increases and narrows when the market calms down. That's because its width is based on ATR, or average true range, which is a standard volatility measurement. You may also notice some markers on the chart. Circular dots can appear whenever the trend registers a new step, making it super easy to spot continuation signals. On top of that, triangle-shaped markers can show up when the price reaches the outer edges of the channel. These are really useful for identifying pullbacks or reaction areas. Let's jump into the settings, because this is where you can customize the indicator to your trading style. First, there's the trigger threshold, which is ATR based. This setting is crucial because it defines how much the price has to move before a new step is confirmed. A smaller value will make it more sensitive and pick up on smaller swings, while a larger value filters out minor noise and waits for bigger moves. Next is the max step size, also tied to ATR. This keeps steps from becoming too exaggerated during sudden spikes in volatility, so things stay under control. You also have the band multiplier, which controls how wide the channel is and basically decides how much breathing space the price has within those bands. Another option is trend hold by bars, which sets the minimum number of candles a trend has to continue before the indicator will even think about flipping direction. That helps cut out a lot of annoying whipsaws. Finally, you can enable trend filtering. With this on, retest signals will only appear if they match the overall trend direction, like showing lower retests only in an uptrend. This really helps you stick to higher probability setups. Now, how do you actually use Trend Impulse Channel in trading? What makes this tool interesting is that it's based on a basic observation of market behavior. After a strong push, an impulse move, the market usually enters what you could call a cooling off phase. Traders may be taking profits, or counter-trend players may jump in. Price often drifts sideways or make a shallow pullback. But here's the key. These pauses don't always mean the trend is over. More often than not, they're just temporary breaks before the next wave kicks in. It's the classic rhythm of impulse, pause, and another impulse. This indicator is designed to capture that rhythm. By tracking clear steps and highlighting those pauses, it helps you sync up with the market's natural flow and potentially find solid entry opportunities. In practice, there's a few main ways you can apply it. The first is trend alignment. The step line and those circular markers give you a very clear picture of which momentum is headed. If you see multiple steps forming in the same direction without a flip, that's a strong sign of conviction, meaning the trend is likely to keep going. This helps you stay aligned with the right side of the market. Second, you can look for retest entries. This is where those triangle markers are key. The approach is to wait for price to pull back into the channel toward one of the bands. Then look for a triangle retest marker to confirm. If it lines up with the main trend, especially with the trend filtering turned on, that's a potential higher quality continuation setup. It's about being patient and letting the market come to you. This means watching for price to push decisively beyond the channel after a period of consolidation or sideways action. To increase the odds of success, you want to look for breakouts in the direction of the established trend. So in an uptrend, you'd watch for a breakout above the upper band. That way, you're stacking more confirmation on your side. To wrap things up, the Trend Impulse Channels Indicator by Zierman is a unique tool that steps away from traditional smooth averages. Instead, it gives you this stair-step framework for following trends, all while adjusting to volatility. It helps highlight trend direction, possible breakouts, pullback opportunities, and consolidation zones with greater clarity. By understanding the impulse pause rhythm and using the indicator's visual cues like the step and adaptive bands, you can line up your trades more closely with how the market naturally moves. One last note, everything shared here is for educational purposes only. This isn't a financial advice. While the strategy concepts are built around this indicator, you should always combine them with your own price action study, fundamentals, or other confirmations before making any trading decisions. Remember, trading and investing always involve risk, and you're fully responsible for your choices. If you got value from this breakdown, hit that like button. And if you'd like to see more trading content like this, consider subscribing. Thanks for tuning in, and I'll catch you in the next one.